Coming up, global interest rates fall. The biggest IPO this year in Australia hits the market, and the Santa rally. Where'd it go? That's all next. It is your daily 10-minute business and finance news wrap for this Friday, the 13th of December 2024. The Australian share market fell today. The S&P ASX 200 off by 0.4% to 8,296. It means it's been a pretty lacklustre 5 days for the ASX 200, down by 1.5% this week. For more on the day's market action, I spoke with David Walsh, a wealth advisor at Sato Advisory. David, the market is down today. Why, and where are the losses predominantly coming from?
Yeah, today what we've seen is largely the growth names in the resources sector sell off a bit. What we've seen really is the biggest detractor is the resource sector. We're really giving up, the optimism that we had from Monday with the optimism around the Chinese government stimulus. What we need to see there is some more concrete actions. There's no magic beans to that economy. What they're going to do is incremental stimulus, and at this stage, we're not seeing any big macroeconomic bazooka. So we had some optimism, and we're just fading that away into the close today.
We talk interest rates. So earlier this week, the Reserve Bank left interest rates on hold here. The Bank of Canada cut interest rates yesterday. Overnight, the Bank of England cut interest rates, and we've got the US meeting next week. What are expectations for the US? What does it mean for markets? And then will there have any implications for Australian interest rates?
Yeah, it's interesting. What the last data that I saw was that there's a 97% chance that we're going to get an interest rate cut in the US next week. And what we've had really is some mixed data, like the CPI yesterday was, you wouldn't say that that's trending back towards their targets. You would say that if anything, it's inflecting a bit higher. But the market's really locking in that rate cut next week. Now, what happens from there, we'll have to see. I mean, I think what we saw in the overnight action in the currency market and the longer-term bond yields is suggesting a more hawkish start to the new year. Historically, falling interest rates have been bullish for the equity markets, but what we're seeing in the bond market and the currency markets is, it's a bit more of a mixed signal. So we'll just have to wait and see.
Data center company DigiCo became the biggest IPO in Australia this year. It's a $2 billion listing. So far, debuted at a discount. What do you know of the company? And we haven't really seen a lot of IPOs over the past couple of years. The last one that was just as big or a little bit bigger was that of Viva Energy back, I think, in 2018. What does it say about the appetite for IPOs?
Yeah, look, firstly, it's great to see some IPO action of this size back into the market. And I wouldn't read too much into the day one action. It's most likely that we see a few weak hands get flushed out. I wouldn't have expected a day one, IPO pop on a company like this. What we've got is some really sophisticated promoters who would have had, deep conversations with the cornerstone investors coming into this IPO. So I think that the pricing was relatively tight coming into it. The mandate of DigiCo is to own, operate, and develop global data centers. So really, what we're going to see is what we're interested in seeing is what comes next. And from a top-down view, you'd expect that we're using more data in the future and not less. And what we've got here, backing this DigiCo REIT, is a really experienced operating team, management team who've built a track record of adding a lot of value to assets. So, I think there's some optimism to be had around this company into the future. So not so much on the day one, don't take any signal there. More generally on the thematic, or one of the thematics I'm really hopeful for into 2025 is an increase in capital market activity. I think it's almost a given that we're going to see that in the US with some of the changes or deregulation to the capital markets and the change in the FTC there. But what it would be great to see in Australia is some more large-sized, growth-orientated companies coming back to IPO in this market. Maybe we see a few of them sort of come out of private equity portfolios or other private businesses come to the market and use this as a vehicle to grow their business in the future. So, it's a great sign. I'm really happy to see that happening. And like you said, it's been a while since we've had something like this. So optimistic that it will continue.
When we see an increase in IPO activity, right, what does it say about the investment environment?
I think it should say that it's more constructive. It should say that the promoters are looking at the equity market as an avenue to raise capital that can give them the right value, or what they perceive to be the right value for their company. Animal spirits that we like to talk about in the investment markets are alive, and people are looking at these opportunities with optimism. So generally, it's quite positive. Like in sort of the bear markets, you don't see many IPOs coming in because they know that they're not going to get the price that they're after. So, it's generally a positive.
And would it be fair to say, if we look at the potential IPOs next year, would Virgin Australia be one that's been hotly looked at?
It'd be interesting to see that one come back to the boards. I mean, it all just depends on operationally how they're going, and sort of how, generally they want to come to the market when things are inflecting on an upward trajectory. So that would be, very situational specific. What I've been hearing, we could see some more infrastructure stories coming through in the IPO market next year, which has always been quite popular here in Australia. So that would be something to keep an eye on.
And finally, as we approach the end of the year, we typically see what we call a Santa rally, right? But where do you see the opportunities for investors right now?
Yeah, the Santa rally might have come a bit early post the Trump bump, and we might be just having a bit of digestion now coming into, the post-Christmas lunch digestion period. One of the things that I really like to do at this time of year is to get the bottom quartile performers, or the bottom third performers of the market, and really go through them. And while our portfolios are skewed more to quality growth, what we can see is what we do look for is quality, with a bit of value that's got a catalyst coming in there. So I'll really go through that and have a look for those that are still quality, but we could see a turnaround or a re-rating in the next year. So on the short list there, I'll be taking a deeper dive into Endeavour Group, Steadfast, and the Web Travel Group. I think it is now the demerged WebBeds business. I think those have underperformed the market this year, and so we'll be really reviewing their prospects for the coming years and beyond.
That's David Walsh there from Sato Advisory. This SBS On The Money stream is provided for informational purposes only. The content in this stream should not be understood as constituting advice or a recommendation. It is not personal advice, and it does not consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decision.